Eric Muathe, Muathe.com. Let's take a look at the chart for TMUS, T-Mobile, and we can see relatively big down day for June 27th, 2017. All right, so about 3.9%. And we can see that if we go back and take a look at some of the technical reasons that have led to this pullback over the last couple of weeks here, you have to go back to the daily breakout attempt right there. And the stock was trying to break out above the daily closing high of 68.31, which is this daily closing high there. So there was an attempt to break out here that failed on that day, tried to break out here on those 2 days, ultimately was unable to stay above 68.31. So that's a failed breakout. As we know, failed breakouts are notorious for taking stocks lower. Number two, and this I think is the key, is we tried to make an improvement day to day to new highs, but the RSI was making lower highs, and that was also showing that it was unable to move above 61.8 on the daily. In fact, you can even see that it's a double top, twice rejected when trying to move above 61.8 during this breakout attempt. That's a sell signal, generally speaking. Also coincides with the previous sell signal level. In other words, the RSI had broke down here. This break brought the stock lower off the highs there on an intraday basis. So you take that information and draw a straight line like that, and you can see again on the line double top rejection. What we look for is uniform action, and here we have nice uniform action, double top rejection on the line. And again, check the description of this video for a link that gives you more examples and deeper explanation into this method, which I call the uniformity method. Keep in mind, this line so happens to be also at about RSI 61.8. Now let me add a few things here, some observations. So we can see this day is of bigger size than the previous couple of days here, and that expansion lower can be because the RSI dropped below 30.9, and again, that's another level that markets respond to. In fact, check the video description for a link that discusses how I get this number, because you'll find that this number is actually a variation of 61.8. Now, also take a look at the weekly chart. This week we are seeing an expansion to the downside, relatively speaking. Why? Because we see the RSI move below RSI 50. So as you move below 50, you tend to have relatively expanded move. Either if you're moving above 50, for example, take a look at this up move above 50, you have this nice up week. Here we are seeing the exact opposite. Cracking below RSI 50 tends to bring this type of a reaction. So all these numbers that I discuss here, 61.8 has been mentioned in this video, 30.9, and of course the halfway point, RSI 50. All this play a role. And also don't forget the other number, 69.1, which was not mentioned in this video, but also relevant. In fact, for those of you who know what I'm talking about here in terms of the RSI levels, if we flip this chart around, this instead of being 30.9 is actually 61.8, and of course the two add up to 100. So anyway, the moral of this video here was take a look at this failed breakout taking place with negative divergence, and also failure to move above 61.8, which in my own research tends to suggest it is the worst type of negative divergence. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESCS. Woo!